Okay, Psychology Part 1, Forex Traders' Emotional Cycle. In this section we're going to have a very quick look at the emotional cycle of a trader once a trade has gone live, and how this emotional cycle can have a direct effect on your overall trading profitability. Okay, so as traders, I'm sure you've all realized by now that trading Forex has a lot more to do with psychology and a mindset than it has to do with actually finding a good system to trade. Of course, you do need some kind of a system or an edge, some kind of methodology to get you in and out of trades and to find that corner of the market where you can extract money. But your emotional state of mind when you are entering and exiting trades is extremely important as well. So when trading any strategy or system, the ability to keep a relaxed state has a direct effect on your ability to make correct and unbiased decisions in the trading environment. So let's talk about being in control. We're in control of our daily lives for the most part. So obviously, when you get up, what you eat for breakfast, obviously if you're working a job, you're not in control, but every other part of your life you are in control. What you do on the weekends, that kind of thing. The hardest part about the Forex environment to us in our minds is that it really is a place with no boundaries, yet we have no control over it. So let's have a look at firstly what we do have control over when entering a trade in the Forex market. Okay, so first up, before you enter a trade, you're in complete control. You can analyze the market, you can find whether your edge, system or strategy is present, you can abide by risk management or choose not to, obviously your position size and your entry criteria like we talked about, after the trade is executed. Obviously once a trade is executed, we have absolutely no control of the movement in price. We have taken a trade based on previous price patterns in the market, and we feel that the price is going to do one thing or another, either go up or down to make us a profit. So all we can control is our exits, which is taking profit, and trade management, which is tightening our stops, or again taking more profit or taking whole profit. So again, what we do not have control of is the movement of price. So let's have a quick look at our emotional states when we are in trades. So obviously this is the fluctuation in what can happen to your emotional state depending on how the trade is going. Obviously the emotional peak for a trade that's working would be thrill and euphoria. And obviously when that trade starts to pull back, you get a whole range of emotions, ending in an emotional peak to the downside of depression. Being able to control your emotions and keep them in a very flat line and not allowing it to fluctuate when you are observing, especially when you're trying to make unbiased decisions in the market, is going to greatly improve your trading and your results at the end of each month. So how is it that we can get on top of this? Obviously as a junior trader or as a developing trader, you would have been aware of these emotional states. But let's have a look at three key things we can do to begin to control these states. So number one, risk. This is probably one of the biggest ones. If you are risking too much money, your emotional state will be amplified, either to the upside or the downside. If you're risking too much money and you get a win, you'll think, hey great, I've got all this extra money, I can probably take a little bit more risk with the next trade, and it doesn't matter because I've built myself a little bit of a buffer. This is definitely a reckless state of mind to be in. The number one thing you should be doing is protecting your capital. And obviously on the other side of the spectrum, if you've risked too much and you find that the trade is moving against you, even by just a few pips, you become very emotional. You might close out the trade and it'll end up being a winner, or you could take another trade thinking that, look, I am right, all it's got to do is move back to the original position and I'll be at break even, or you could stop it and take a trade in the opposite direction and then watch the trade turn around and go against you. There's a whole range of things that can happen if you are emotionally charged when in a trade. So the number one thing is look after your risk and risk management of your account. For more information on that, go to my resources section or YouTube channel, and there's a video called Only Risk 1% of Your Account, Why? And that'll give you a lot more information on that. Okay, number 2.